right to the next session, which is by Starling Bank. Julian, Sawyer, the CEO of Starling Bank. Starling Bank is a very interesting course, trying to build a bank from scratch. And if you follow the press, then I think we can say that they have success. And one of the propositions that Starling bring to bank is like what I call banking as a platform. So Julian,
very much
to introduce us to that interesting topic.
Thank you. Good afternoon. We've heard a lot about real-time payments today, and so I'm going to talk a little bit about our payments as a service and one of the things that we're doing to change how we consume payments going with PSD2 and APIs and the changes in the industry. So what I'm going to do very quickly is I'm just going to introduce Starling Bank, and then we'll delve down into the payments world. So Starling Bank is a challenger bank. We got our banking license in 2016 in the UK, and in 2017 we launched our current account on a mobile phone. That is only on a mobile phone. It's not iPads, it's not browsers. If you call our contact center, they will tell you just how to make a payment. So very, very focused on a current account. Just to make sure that everyone is on the same playing field, a current account in the UK tends to include a lending product, an overdraft, as well as savings, and we have a MasterCard debit in there. What we also did was we launched our SME proposition, which is, again, is going to be a theme here, a current account on a mobile phone, which is very much for the S of the SME, so really for the micro business, for the sole traders, and again, to try and change the provision of current accounts to that market. One of the things that we did and made a decision very, very early on when we started the bank was to directly connect into the payment systems, predominantly in the UK, faster payments and BACS. And for those of you not from the UK or know anything about faster payments, that may not sound such a big deal. However, we were the 13th bank in the UK to join faster payments out of 400 odd banks in that country. So it is still a very, very exclusive club. One of the things that happened as soon as we announced that we had joined Faster Payments is people started asking us to do sponsorship banking, transaction banking, agency banking, whatever you want to call it. And the reason why is up until we started doing this, the only way that you had access to Faster Payments, and therefore real-time payments and bank-to-bank payments, was to be sponsored by an RBS or a Barclays. And that traditionally was a very slow process to onboard. It was an expensive product, and it was also batch-based. And so when you reflect on what we've heard today, you realize that just really isn't fit for purpose in today's market, and particularly with a lot of the fintechs that are out there. So one of the things that we decided to do was that we would, in the good old world of fintech, we decided to pivot and create a third division within Starling Bank, which is Starling Banking Services, which is the provision of real-time faster payments. Now, this is all API driven, and what we wanted to do was disrupt the market. So how did we do this? First of all, we said we're going to offer real-time, faster payments through an API. That doesn't sound that special, but no one else is doing that. In other words, send us a payment instruction, we'll execute it in under a second. We'll give you sort codes, we'll give you account numbers, that's virtual addresses, and you can have all of that through a set of APIs with onboarding measured in weeks. So this is very much a software as a service. And on my last slide, I'll draw some conclusions about the things that we're seeing in the industry and why that is important and challenging. What you'll see there is a number of our clients and logos. You'll see some banks in there, which we're obviously particularly proud of that we're running their payments for them. But you also see the government, the British government in there, e-money institutions, as well as corporates. So a wide range of use cases for people who are now starting to think about faster payments and what it means. So this isn't just about replacing one provider to another provider. This is about changing the business models. This is about giving your customers something fundamentally different than what they've had to date. So that kind of makes sense. We went live in 2017 with this product, and we were very happy with that, and it's going really well. But there was one problem. And that problem was that most of our clients had to be regulated. they had to be either a bank or an e-money institution. And that's the problem, because not everybody is. So what we wanted to do was then to try and see if we could break the model one step further. And that's when we introduced our banking as a service. And our first client is Raisin, which is a German savings marketplace. And we run Raisin's bank accounts in the UK. So what does this mean? This means that you, as a brand, as an unregulated company, that's the key bit, can now offer banking services. You can offer a bank account. So you have complete control over the customer experience, the customer journey. You collect the information. Your customer will sign our terms and conditions. We're really, really clear on that. We do the AML and KYC. They have access to real-time payments. But also, they have FSCS, or the European Deposit Scheme, so 100,000 euros is protected, and these accounts are interest-bearing. They're a bank account. And e-money institutions can't do that. So now what you've got is the provision, and as I say, Raisin went live in October last year, but what you've got here is a different model, a model where you can give consumers that protection, you can give them the reliability, plus also you can give them access to payments. So what I want to do is just, on my last slide, is just draw some of the so what about that, because that kind of probably makes sense, I hope. But it's the implications that I think are quite striking. So if we look on the left-hand side, if we look at the threats here, how many organizations are totally constrained by technology? How many organizations are driven by regulation? And so while there may be some great ideas out there, you may have a great business case, the problem is you can't actually execute them because of regulation, because it's not high enough on the change agenda. And then organizations are focused on legacy. And yes, we all know about legacy systems, and we've all got bored to tears on all the CIO's problems. However, let's think about legacy customers. How many customers do you have that aren't moving onto the digital journey, that are stuck wanting to do things in a different way? How many of you have got legacy staff that were hired in the wrong way of working, whether that's waterfall versus agile, whether it's people who are working in branches, whether it's people working in customer service? And then are you measuring the right way? Have you got the right KPIs for the business? I use a good example that if you go back even just a few years, if you look at the annual reports of most banks, they will tell you how many products per customer they have got. That is not a KPI that I as a consumer care about. I care about customer satisfaction, value for money, safety and security of my money, not how many products you've managed to flog me. So what are your KPIs? So those are the threats. Those are the threats that organizations have got. Now let's just go back to our payments as a service and banking as a service and look at what those opportunities are. Those opportunities are about changing the business models. As I said earlier, it's not about replacing one service provider with another provider. If you were offering merchant acquiring, in the last few months, 12 months or so, the idea of doing instant disbursement to the merchant's bank account is now almost seen as hygiene from what I can see in the acquirers that we've been talking to. Yet in the UK, 2 years ago, 3 years ago, it was a 3-day delay for you to get your money. So you're now changing that business model. Is that a premium service? Should merchants be paying more for that? But it does change the model completely. Going slightly off topic for what we're here today about, but we have a number of clients within the salary finance market, and I can probably guarantee that in the next 2 to 3 years, we're all going to be paid fundamentally differently than we are at the moment. Most of us get paid at the end of the month. We do a month's work and we get paid. That is going to change. We're going to be able to get our salaries sooner. We're going to be able to borrow. We're going to be able to get our money differently. And that changes the business models through real-time payments. So we should think about this being fundamentally different than just replacing one provider with another. Quicker to market. The scary thing about what I've been talking about, and the only bit I want you to walk away with, is the time to market. You could onboard a bank account, create a bank account, or access to payments in a handful of weeks. And I do mean a handful of weeks. So who is working in a WeWork office right now? Who is sitting in their study at home, building a fantastic app, using services like these payments and banking as a service, and disrupting your business and our business? Because in the old days, and the old days being only a few months ago, if you had a great idea for a great product, what would you have done? You would have had to have gone and partnered with someone. You would have to have gone to the regulator and become an e-money institution or a payments institution or a bank. And then, therefore, you're thinking about lawyers, capital, board of directors. What I've just said, I'd never mentioned the word customer in anything I just said. And yet with this service and these type of services, you could have someone who's totally focused on the customer and buying these services. So what we are now getting is the value chain that we are all working on in our industry is now being provided by different people. And if they can be provided as a software as a service which is consumed at a reasonable price with reasonable onboarding, that is going to disrupt all of our industries. And that, I think, is the really exciting part of where we are today in the industry. So we shouldn't be thinking about this is how it's always been done. Can someone do payments better? Can someone do the regulatory things better? Can people do your technology better? Where are you really, really focused? And where are our respective clients and customers really focused? And that, I think, is the really interesting part about where I'm seeing the world of open APIs and PSD2. So thank you very much for your time.